Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep up with the analysis on euro currency. Mostly market stands in the same area, so where we have left it on the weekend. So yesterday we've got this drop, but with this downside action, euro hasn't broken down the lows, so mostly stands in the same range. On other markets, pretty nice picture stands. So if you take a look at the dollar index, here we have mostly the same stuff. Except that here we have new top. On the euro currency we don't have the new low, but in general performance very similar. So this even has been forming some bullish reversal bar. But recall what we talked about, the grabber on the 10-year bonds. And if you take a look at the chart of the 10-year bonds, bingo, we have 4.2% level on the 10-year bonds. So it's very extremely high level in comparison to recent and general historical behavior in the last 10 years, and market totally ignores the cutting of the rate from the Fed. So yields are growing. This definitely is not a good sign for euro. Currently, we probably should keep an eye on what will happen here. So whether this is some kind of the last attempt to go higher, and then market could turn down, or it's gradual upward continuation, because it directly corresponds to performance on euro. If you take a look on euro currency on the daily chart, you could not see it, but personally I see that this is actually the bottom typical for a double repo buy, at least how it usually starts. Take a look by yourself. So we have a strong downside action here, then retracement as market is trying to sell it down, because traders who are sitting in this trend or regretting that they have not taken a position here, watching closely for any attempt to go short. Once this attempt has appeared in the market, they are immediately selling down, and that has led to the collapse on the market. This is actually what usually happens, and that is a actually vital candle. Whether this will be the defeat of the bears, if market will return back up and touch the stops right there, or this will be indeed downside continuation. So this probably will be resolved in the nearest few sessions, this question. If it will be the defeat of the bears and market will jump above this area, it's consolidation on the bottom of this few candles, this will mean that we will keep going higher. This situation happens very often at reversal points. You could find lots of them. So for instance, right there, there's upward action, retracement, attempt to go higher, collapse. Once market break and consolidation down, market keep going higher. The same story here is minor reversal with the same consequences. So once again, right there on the top, you can see a reversal in the same way. So when the market starts day by day changing the direction, it means that it's trying to change the trend, that the possible make possible reversal. But whether it will be successful or not, this is another story. So on the 4-hour time frame chart, you even could see better the shape of the kind of the double repo pattern. That's what I'm talking about. So actually, upward retracement, collapse from possible selling, and market right now is trying to go up. To get at least some confidence that we could get some upward continuation, preferably is to not don't do anything until market will take it out of the stop. In this case, it will tell that those who have taken short positions retracement will be trapped in the wrong direction, and it could trigger a bit more extended upward pullback. This will be just safer, trying to take the position when the market will return and back up here. On the hourly chart, I do not see something really interesting, so mostly pullbacks just starting, and it's interesting to see what strength it will have. As I said, it also has direct relation to performance on the 10-year bonds. Recalling back the fundamental background, probably we can't count on a big chance that this really will happen, because fundamental background, as we explained in the Forex report and in the gold report, now actually is crushing all technical pictures, technical tools. So here's strong demand to the United States dollar by fundamental reasons. But still, we could watch and see what will happen here. The same probably we could say about Great British Pound. Here is mostly the same story. It has no so strong thrust as the euro currency, but on the bottom, it's approximately the same behavior. So, and then we make decision if market will still break this area to the downside. So this area will be broken. In this case, probably we will be watching for a deeper downside continuation, because if confidence area hasn't helped to hold the performance and market hasn't shown any retracement, hardly it will do this on a just single standing level. So in this case, next target will be 107, 107.40. We already mentioned it. This is big ABCD down extension. This large ABC top pattern COP 107 and fib level around 107.40. Downside breakout of these lows will mean that we will keep going lower. So that and towards what we have here on EUR as a bottom line for a long position taken on the intraday charts. It's a bit early. We need to get more confidence, but market is trying to do something around. For taking the short position, we need to get the breakout down of these lows and confirmation that this was just a retracement and market indeed keep going lower. Theoretically, if you are ready to take more risk with this setup and you would like to take the short position, you could try and use stop sell order somewhere around 108, maybe slightly higher, closer to the lows around 108.25, maybe, sorry, 108.10, 108.05. So somewhere near the bottom. And if markets start collapsing, your stop will be triggered, and if downside action will happen, you will get a great entry. But this is accompanied with a higher risk that you could be caught in a wash and rinse performance. So this also could happen. That's actually all scenarios probably that we could offer in the current moment.